talk about this segment. Yeah, hope this is better. Great. So credit or lending is one of the oldest business industry of human civilization right from barter age. And it has evolved, gone through the test of time all this while. Credit on one side brings flexibility and affordability for individuals and businesses alike. It also creates a great business opportunity for the players and thereby creating a profitable equation. But it has got its own set of challenges as well. As it is said, money pulls money. So if you have money, you are asking for more and there are more seekers there. An industry which is evergreen and growing in leaps and bounds. We move on to Indian context. Especially with the advent of digital lending, the country has witnessed a growth of almost 40% year on year only on the digital lending base over last 10 years. It is also predicted by the year 2030, only consumer lending would be crossing $720 billion worth of business, which is a whooping 55% of the overall market opportunity into digital lending space. So that's a big opportunity waiting for all of us to capitalize upon, which requires certain evolution also in terms of processing that entire equation. Now with the advent of digital lending and the adoption of technology, it has impacted consumer behavior. Consumer today is looking for more avenues which are tech driven. The lenders have also evolved with time. They have started picking information from a traditional setup to a much faster setup, a much more dynamic approach to address the credit underwriting and decisioning. And there comes the requirement of alternate data. Alternate data can be information from social handles, wherein the work of a person can be observed, his overall performance on social handle can be seen. Information from his call records, information from his psychometric details, his motivation factor, personality, these all impacts the overall decisioning and makes an overall dynamic setup. This has also impacted on certain spaces like, for example, fraud detection. Today the lenders are in a space wherein they can detect the fraud right at the inception of it, which was not the case before. The decisioning has changed to such a level that the underbanked and unbanked population are also getting reached by the lenders today. So lot more space to work upon, lot more dynamism, which is a text-based setup, is getting in progress. But we need to understand this a little deeper. Now to understand this, we have a panel. Let me take you through the panel member. So we have Sangram. Sangram is the CEO of Indifi. With almost 2 decades of experience into finance industry, he has been at a president level in Axis Bank, MD and CEO of Freecharge. Currently, he is with Indifi. We also have Presha. She is CEO of Credit Solutions. She has been instrumental in the growth of this fastest growing NBFC of India over the last 6 years, starting from a scratch there. We are also joined by Anoushka Dua. Anoushka heads payment services at Citi Singapore and Asia South. And lastly, we have Avijit Jain, who is the CEO of Paytm Lending. Avijit has almost 25 plus years of experience in Paytm and HDFC Bank. So welcoming all of you. Quickly moving to Anoushka. Anoushka, we were discussing about this lending piece and use of alternate data, and overall over last few years there has been an increase in the digital transaction. With increase in those transactions, there is a massive data opportunity available across this payment transaction. How do you think this data can be used effectively and help the overall credit lending and the decisioning process?
Thanks for the question. I think you spoke about it, right? I think what we are seeing in India is significant growth of the digital payments. And what really that is doing is changing the nature of the corporate clients who are going much more direct to consumer. This therefore is leading to significant disruption in the traditional business models and leading to much more interestingly that's also doing is leading to a transition in platform-based services and business models like B2B, B2C. These platform-based services are actually creating significant amount of transactional data, which you spoke about. And it's really not coming to digital lending second. I think even first for the corporates, what it's doing is, it's really giving them avenues to use this transactional data to drive focused and targeted business outcomes and revenue models. The revenue models themselves are changing, moving away from transactional products and services sales to much more contract-based relationships, miniaturization, pay-per-use, subscription-based models. Now, what is it doing for the entire ecosystem of banks, non-banks, fintechs that are involved in this space is giving them significant amount of reliable data and is therefore creating a pivotal shift from traditional lending to digital lending. You spoke about some of the statistics, right? And I was looking at it from a BNPL perspective, where it's currently valued at $9 billion. It's expected to grow to over $20 billion by 2032. However, if you really come to the core of where the credit deficit exists, right, that's in the MSME segment, where we currently have a credit deficit of $220 billion and it's expected to reach about $600 billion in 5 years. And that's really where, before the panel, I was talking about to Sangram and with her, and I think what we were discussing is, in the MSME space, can we really leverage alternate data, whether it's through social commerce, psychometric parameters, social and demographic profiles, and incorporate it in your traditional credit scoring frameworks that the banks and the fintechs have, to then try and make predictive insights into the repayment capabilities of the MSMEs and make the credit scoring models lighter, much more cost efficient, and therefore use it as an avenue to create and inject liquidity into the MSME segment. I think recently, earlier this week, we saw the launch by ONDC, right, on the sachet loan or the 6-minute loan, like they say. And I think that's just a start. When they move into the next phase, whether it's through GST-based financing or invoice financing, that truly will create opportunities in terms of embedded financing and given opportunities for banks and finance to leverage data from these open digital economies to scale up financing to the MSME segment.
Very interestingly, what I take from this is that, entire predictive mechanism which can be built up on the basis of this alternate data is what is going to change the overall outlook of how do you exactly, decision on the credit part apart from traditional thing. But taking a step back from here, Sangram, I would like to take your views on this, that primarily while we understand why there is a need of an alternate data, but in terms of SMEs and MSME, what Anoushka was mentioning, how do you define this need for that segment in terms of what they require and how this actually impacts them over a longer term? And in terms of tech-based opportunities, how this data can be used effectively in terms of a scalability?
Thanks a lot. So, look, alternate data has multiple ways in which can be used, right? And probably will require a longer discussion, but if we narrow ourselves to what we're talking about today, which is around credit solutions, fundamentally, if I step into the shoes of an underwriter, as an underwriter, what am I trying to understand? I'm trying to understand the borrower's ability to pay, intent to pay, and the lender's ability to collect it. If you had perfect information and if you had all the time in the world, not 6 minutes, to take a decision, you would do a lot of things which today are done in large ticket lending. When you look at very large, and by large ticket I mean 50 crores, 100 crores, 500 crores kind of lending, you do that. And it's not possible to do that when you try to replicate that for the typical MSME lending where you're trying to do a 5 lakh, 10 lakh, 20 lakh, 30 lakh kind of loan. So you've got to be able to take those decisions at a distance with imperfect information, without that much time being available, without being able to do an individual underwriting. So you've got to start depending on scorecards, etc. And that's where this availability of data begins to play. So for instance, if I were to underwrite a large company which is, let's say, 500 crores, I would want to, amongst various things that I would look at, I would want to see the order book of that company. That do they have future cash flows which are going to get generated or not? What is the current reliability? How much returns of their goods have been happening on what they are selling? What are their customers saying about them? Now you can do that when you're doing the large ticket kind of thing, typically wholesale lending, but you really can't do that when you're doing the typical MSME lending. So what do? You start looking at alternate sources which give you similar information. So if it's an online seller, you look at things like what are the ratings that you're getting on the seller. If it's, let's say, someone who's using a platform like a typical e-commerce platform, you look at return on goods as an indicator. All of that is trying to give you some information. And typically what we've seen right now in alternate data is a lot of that is pointing towards the ability to pay or the ability to collect kind of information. So it's a lot about getting surrogate sources to give you, to tell you more about the financials. Again, if you want to lend to a business, you do want to understand what the margin profile is. Very difficult to understand that sitting completely remotely and not knowing much about the business. So then you start looking at the banking, you start looking at the GST, you start triangulating from there that what are the vendor payments and what is the GST being collected on, what's the GST being paid on, and hence what is the potential margin profile of this individual. So a lot of the alternate data that we look at right now originates from the need of the first principles of lending, which is to be able to identify some of these things about ability to pay, etc. And then see that, in absence of that perfect information, what are the good sources of alternate data which will help us split that risk? Right? And I think the space will keep on evolving and we can talk more about that. But the impact that it's had on MSME lending is that by doing all this stuff and by at least going for data sources which are available either publicly or with consent, it has reduced the cost of that decision. And as you bring that cost down, it's the decision reliability of having two credit underwriters go and sit at a customer's premises for 3 days and then take a decision will be very high, but it's going to be super expensive and it'll exclude a large part of the population. So you've got to do things which is going to reduce the cost of taking that decision by order of magnitude. And alternate data allows for that, and that's how it allows the democratization of credit.
Very interesting. So from bank statements to order book to these kind of alternate data is how the segment is evolving. And as you rightly said, the pace of lending is going to define the pace of growth as well. Right, Presha, we have been listening a lot about account aggregators as one of the important contributor to this space. We understand at your organization, the account aggregators have been used very effectively. How do you think, or what do you think, how this framework is going to help into the overall credit lending ecosystem from an account aggregator standpoint?
Sure. So firstly, good evening everyone. Thanks for having me on the panel as well. I think maybe before starting into account aggregator, I want to build slightly on what Sangram said, right? And I think he summarized it really well. But I think, if you really take a step back, MSME lending is, really going after that 65, 70 MSMEs. And it's very clear that, besides that 15 to 20% that get credit from, banks easily, there's a very large segment that is totally underserved. Now, for the segment that is underserved, this is mainly because also of the fact that, it has always been the traditional way of lending, balance sheet based lending, and, using these alternate data, using cash flow based lending will really help to enable the credit. I completely agree with, the way Sangram articulated, right? It's not just about the alternate data, but when you think about how you want to underwrite a 3 lakh loan, it's extremely different to the 30 lakh loan. And for that, you have to build in a lot of the automation and how are you going to sort of your credit underwriting, all that to be seamless in order to underwrite this 3 lakh loan effectively in that sense. But when you actually then step back and you think of automation, right? One is, definitely helps with your cost optimization. But automation itself can be divided very clearly into 3 levels, right? So the first level is, which we all know, which we build on, is the digital public infrastructure. If you look at the DPI side, the identity side has really taken, really one of the best shapes and forms, right? Because of Aadhaar, we've been able to sort of get the KYC, e-sign, e-Nash, all of that ready. The second is the payments layer. On the payments layer, because of UPI, we've also been able to bring in a lot of automation. Now the third layer is effectively this data. For that data, account aggregator is going to play a very, very important role. The way you think about it is that you have all the information that the customer is able to pull across various sources, right? So for example, access for account aggregator should be your banking data. For an MSME, it could be your GST data. For consumers, could be, say, your insurance data, investment data. It's a one-stop shop to access the data. Now, account aggregators doesn't read the data, but consumers effectively give consent, and through that one-stop click, the lender is able to get all this data in a place, which then plays to the theme of how it builds to the automation that we're talking about, right? So you've got your identity layer well sorted. Now you've got your payments layer. This is the data layer in terms of how the account aggregator framework is going to be able to help. So I think while that's going to help us build a lot on the automation, the second part of account aggregator, which is I think going to be a big differentiation, because when you give consent to use your data on account aggregator, it also allows that consent to be used after the loan has been disbursed. Now, if you take the traditional lending model, has always been lend and forget. But now with account aggregator, you're able to basically monitor. If you have any early warning signals that, okay, someone might, be delinquent, and you're able to pick up the patterns because you access the data, you can do a lot more in order to be able to also track that, right? So I think that's also going to be the power of account aggregator in terms of this ability to continuously monitor post as well.
No, that's very interesting, because while all this lending part takes a multifold growth, there has to be an eye which has to be kept on bringing the money back and taking care of fraud protection as well. Avijit, I would like to take your views on the basic difference between traditional and alternate data, which is going to fuel this growth engine, and what opportunity that brings beyond SMEs and MSMEs, because they have touched. So because at the end of the day, we all are looking for growth, and at a retail individual level, this credit possibility brings in a lot of flexibility in terms of affordability, right? So from a retail point of view, what is the difference? What are the opportunities which are there, right? And additionally, what are the responsibility of ecosystem to address into this alternate data? Yeah.
Okay, so I think quite a few things are covered, of course, by my fellow colleagues here. I would touch upon on the consumer side of this leveraging of alternate data and all. Before I start, I just want to congratulate you and everyone, of course, who's been part of GFF. This is third year in the row, but the kind of engagement, people, a lot of participants and all. This is really, really overwhelming. So thanks a lot for coming in, everyone here also. To listen to us and of course encouraging us. Thanks a lot. Okay, so to come back to on the point, so I would take real time examples and all. How should we look at leveraging alternate data and all? So if you look at any of the sponsors here in GFF also, if this GFF would have been in 2002, 2003, I'm talking about those years because that's the time when I started my career with a traditional bank like HDFC Bank and all. It used to be, as Sangram also covered, it used to be so we used to have three terms: sniffing the file, which is until as I don't see the file, I don't sniff it, I would not give the loan. Second is what is touch and feel. I want to see the face of the customer. I want to see where he resides, where he operates, right? So, and then third was, of course, the brick and mortar. What we say is that of course, you have physical papers. Big time company directors are getting finicky about signing those hundreds and thousands of papers and everything. So we have come a long way. And how it is, as I said, that if we would have actually seen GFF in 2004, then it would have been actually maybe 2-3 names, which is, I would say, income tax department would have actually attended or sponsored one of these events because they said that you are using a lot of my data. But now, if you look at, you look at that 90% of these companies, they're like actually supplying this alternate data, right? Which is actually not only defining the digital lending ecosystem, but redefining the way you look at the creditworthiness or the underwriting models and all. So this is of course to cover on the how this is actually changing life. I will take a step back and then of course talk about how this has actually helped us where we are today, and why regulators are also worried about the kind of growth what we are showing, right? Maybe it is kind of put it on the new age companies like fintechs or the partnerships with the between REs and LSPs and all. But then again, this also comes with my experience. So I've worked for close to 20 years with HDFC Bank. The kind of volumes what HDFC Bank, when it was on peak in terms of unsecured and they were kind of ruling the market, the top line would have been, I think, 7,000-8,000 crore. Today also if you talk about, they would be almost at the same level. Whereas RBI has been showing their concern about the 30% growth year on year. A lot of people are getting loans and all. But then we have to understand where this growth is coming from. This growth is coming from those segments which were always dependent on the parallel economy, because they were not having first the banking. Second, even if they were transacting, there was no way of establishing that this is the kind of cash flow you have, because we were into cash economy and all. Of course, for everything, there is a negative side, there is a positive side. So demonetization also had a positive side of it. Even the COVID also had a positive side of it. Maybe it had a more of negative side, but then of course there were opportunities there. So these couple of events in the last maybe a decade actually got those underserved or unbanked guys into the main stream or the main economy, which actually really helped us. So even if I'm a shopkeeper, if I am actually kind of transacting, everything is in cash, then there is no trail of my cash flows, nothing. And then in the absence of alternate data also, these guys were never part of the your economy or your GDP or your overall credit growth and all. So what I have understood and what I have experienced in last, I think 7 to 8 years is, the growth which is coming is largely coming from the segments which were never on the bureaus, which were never on the the traditional data, I would say, when we are talking about the alternate data. They were always available on that. And I'm sure somebody must have done an analysis also, the kind of growth of the new customers which are kind of introduced to credit would have actually come from those who never had any bureau scores or any credit availability. Right? So having said that, so this has actually done a lot of I would say great things to of course the financial inclusion, of course the financial sector. But at the same time, when we are actually looking at, so this I'm talking about, of course, the opportunities, how this has transformed from those years when we were into traditional lending to now, looking at a consumer in light of the alternate data what I have available. So this is not only the opportunity on the one side, but then as Sangram also touched base on one point, which is cost effectiveness. A lot of revolution also happened. As he rightly said, when you are doing this kind of underwriting, you are close to 80-90% of your customer, even if you're visiting them, are coming out to be positive, right? I would say the game of verification and all was largely restricted to that 10-20%. So somebody actually thought that how can I solve for this 80% through the alternate data, which is again that if I know, and then a lot of other players also in this ecosystem, like you have food apps, you have ride-hailing apps and all. This also kind of enriched this thing, because I know every day if I am actually ordering food or e-commerce and all at a particular address, and this data as an alternate data is available, and of course within the acceptable consent-based access of this data and all, then I know that I can cut my cost on a process called maybe contact point verification. Even the document verification also used to be a huge cost for all the players and all. So this is on one hand has given opportunity to reach out to actually masses, which ensured the financial inclusion. But then at the same time, it also helped banks, NBFCs, the new age companies to cut on a cost which was maybe not required at that stage the way we were doing. So these are the things what I feel actually which really helped us. And then how I look at it is we all have heard that data is a new oil, but then I would say oil is a resource which is to be consumed, whereas the data becomes a source which is consumed for your better models, better reach, sharper decisioning, and kind of extending the credit to some of the underserved or unbanked population of India. Yeah, that's how much
I mean, when we look at Indian subcontinent and India and the countries nearby, a whooping 1.7 crore people fall into this category of underbanked and unbanked population. And the challenge remains, even today with alternate data coming into picture, that how you are going to reach out to these set of people. Right? But as you are mentioning that there is a lot of work happening on serving them, offering them credit decisioning, lending is a complete cycle, and without collection happening, this would never actually complete and make a business equation for the lenders. So Presha, I would like to understand from you that how this exactly AI-based new age digital lending can solve the collection problem, because while this decisioning can happen, there is always a risk which opens up when you offer credit to the new set of people without having any previous data available. So how the tech can solve that cycle is something which you can tell us your views on.
Sure. So I think if we think about the lending side, right? On lending, there is a massive amount of obsession today with respect to how do we want to acquire a customer, right? So I'm sure the audience will relate to this, but how many of you have been getting spam calls from various aggregators offering you a loan, right? And that absolutely doesn't work, right? Because that is a terrible channel. But say there's a different channel, right? So for example, say if you are on a platform and from that you get offered a loan, you might be tempted to take the loan from there, right? Once the customer comes and takes a loan, there's a massive amount of obsession with how can you give him the right customer experience and everything. Now, if I look at that, that is the obsession on the lending journey. If you take collections, the traditional sort of aspect and thinking has just been very focused on, what's the DPD, what's the balance, and based on that, you will take a strategy on, okay, let's just do as many outbound calls, or for example, send someone to the field, right? Because you have to go to the field and be able to collect. Based on that, you look at the outcome that you're going to get. Is it collected or not collected? Now, there is the whole other aspect of the, new age thinking and, a lot of the, advanced analytical that you can think about. Because collections can also be thought about with this new aspect on when you're doing this, what's the right messaging that you should be sending. Now, when you segment out, there's clearly a difference. Now, even though he's delinquent, he might just be a temporary stress. So should your messaging be very harsh or should it be a bit more empathetic? The second thing could be a lot of customization on the timing, right? So for example, if you are targeting to send an email at 9 o'clock in the morning, maybe the customer doesn't open it, right? But for example, in the evening, the customer will sort of look at it in that sense. The third in collections could be also the way to think about on what's the channel, because maybe the customer doesn't want to be harassed by getting multiple phone calls. Maybe WhatsApp could be a powerful way. So the traditional way of the traditional way of collections of just focusing on your DPD balance and employing the one channel of outbound can really be revolutionized by thinking about how you can really play via analytics to really push out the right messaging that you want with the customer. On top of the messaging, the right sort of timing on when you approach the customer and the channel that you target the customer. Now, while this talks about delinquent customers, in collections, what you can also do, it can also help you with a lot of customers who are not yet delinquent but who you think are delinquent. So if you get that early warning signals, the same sort of analytics can be applied, because maybe if the guy is good, but he's showing some stress, right? So it goes to the earlier point, right? So I mentioned in AA, for example, you get access where you might see a decline in the bank statement, bank balance. Now, if you get that warning signals, what about sending a message that is very customized, right? So it's more about empathy here of saying that, okay, if you don't make a payment, your bureau score will sort of go, versus sending a very harsh payment and all as well, right? So even sort of customers that are not sort of delinquent, you can do a lot of analytics and all also in terms of how you manage it. I think the last part of collections, which will be quite interesting, is that the biggest focus to collections has always been that once it's delinquent, how do you want to bring the customer current? Now, just a basic example, right? If you have 1,000 customers, maybe you're very successful. From the 1,000 customers, you bring the 900 customers current. Now, if it goes back to my earlier point, right, where you've not done these customizations, where actually it was genuinely a customer which, has the intent but not, the ability, right? When he's brought to current, he's had a terrible experience with you. Now, if again you can do analytics to really help maximize how you can engage with this customer, maybe when the customer is brought back current, and when he closes the loan, you are actually able to engage with him in the future as well. So I think that's how collections will evolve a lot in the future. It's not just going to be the old way of thinking about DPD, just employ, put people on the field. There's going to be a lot of focus on the customer engagement across the right messaging channel and the timing that you're able to engage with the customer.
Great. Okay, moving on, Anoushka, today we will be launching Bharat BillPay's B2B solution. Right? We would like to understand from your insights that how B2B BBPS platform can help MSMEs and SMEs to get innovative ways of alternate financing.
Yeah, and I think Presha kind of touched on it, right? I think in terms of not just using analytics at the time of customer acquisition, but what are various sources of alternate data that might be available during that lending life cycle of the customer to make sure it's a successful one. And I think amongst that, the Bharat BillPay system, B2B build that is happening, will hopefully help to create payment as well as cash flow history for these MSME clients, right? And I think it will give an opportunity for the MSME clients to kind of migrate that data from one distributor to another and the third. And that should then help to scale up the access that they have to credit. I think the real challenge here, or the opportunity rather, I would say, is given that there is this centralized bill payment mechanism that is being set up under the B2B bill, how do large banks like ourselves, Fintech partners, integrate with the B2B Bharat BillPay system and then leverage the bill payment historical data to kind of, again, going back to making predictive insights, to Presha's point in terms of even identifying the right customer with the right borrowing intent. And that, I think, will really help to amplify the credit access that is needed in the MSME segment. And I think there, we could probably start with pilots. It may not work across all industries, but there are certain industries, and I think the initial pilots, whether it's with dairy, pharma, agro, auto, could probably present opportunities wherein, for example, if there is a dairy client that comes on board, uses this as an electronic invoice presentment to the dealers, distributors, the dealers, distributor have an opportunity to access it. Given that the whole order to cycle payment data history is now available, you can now thereby create opportunities for unsecured working capital facilities and inject credit into the MSME segment.
Absolutely agreeing with you. Automation brings possibilities. So all these can be built up, right? Sangram wanted to understand your view on this is where we have reached so far. But what is the future you see of alternate data? And especially we have been listening a lot about AI-based model, ML-based model. What do you think their contribution would be in this overall future of credit decision?
So I think beyond the most obvious future, which is that it'll get used more, what I find most interesting is to sort of discuss about the evolution of alternate data so that it no longer remains alternate. In fact, we have very rarely gone and defined what is not alternate. What is the core data? And sometimes when we discuss it, we come up with very different answers from people saying most people agree on what is alternate, people don't tend to agree on what is not alternate, right? What's the core part. But still some of those things are pretty clear, right? Like financials are considered core. For many people, I think the cash flow information would probably fall more into the core than into the alternate. And there is a distinction here which still exists between what we typically use alternate data, the way we use alternate data and the way we use core data. And to my mind, those are three different vectors there. Firstly, alternate data is still limited in the amount of decisioning that it can help you do. Largely you will find alternate data helping you take a yes or no decision. It is not being able to nuance it further to say the way, continuous data, which is what, let's say if you wanted to get cash flow information, margin information, financials, etc. The way that information could work, alternate data has not yet reached that space. And it would, and I think, better machine learning algorithms, etc. will help us get there. But that is still a limitation. It largely bucketizes your entire information into two parts. So if I take an example, that most lenders, or at least most underwriters and people who come from that underwriting discipline tend to pay, is still not, I don't think alternate data sources, which there are many of them, have really been able to sort of connect very well with that aspect, right? There's a lot more reliance on trying to be able to see the income, but not so much on the intent. And the third aspect is that these, typically when you take a lending decision, and sometimes we tend to forget about that aspect, is that lending decision is not a yes or no. That's only one part of the decision. The second part is always how much, right? And for those of you who've been in the trenches with the salespeople and the credit people in the same room, you will realize that that's where the struggle used to be. That people will say yes, but not that much, right? Now, to take those kind of decisions, we still have to fall back on the core data. Alternate data is not really helping us tell that, this is the level at which you can lend. Beyond that, you are probably over leveraging the customer, or you're going into the realm where the risk is going to shoot up. But I think as we get into more of AI, more better computing, more data availability, and far more data points on which modeling can happen, I think some of the data that we're using as alternate right now will start migrating towards core. I think that will, for the entire ecosystem, will make lending far better.
Well, that's very, very important aspect you have touched upon, Sangram, that ultimately alternate data is solving the yes and no part of it, and not how much. And how much is where the entire competition lies, because a user would always like to pick it up at the best rate and the highest possible credit available in the market. So there is a competition which actually comes up, and I think with advent of technology taking place, this should get solved with man and machine put together. Well, the future looks bright, the position so far has been really good, but things are not always as rosy as it seems to be. I'm sure there must be certain challenges with respect to alternate data. So Avijit, why don't you tell us what are the challenges in alternate data, especially from DPDP point of view, from user data privacy point of view, from PII information, how that part can be addressed.
Okay, so Chinmay, I would say when we have for last 45-50 minutes, we have been actually kind of advocating, I would say, about leveraging the alternate data and all. But then anything which is actually giving you, I would say, or getting you to a new spaces and all, comes with a larger responsibility, and of course your, I would say, certain challenges which you face there. Right, so I would say when we have spoken about how alternative data would be helpful to having a better financial inclusion, we are talking about faster turnaround times, then we are talking about cost optimization. So there are a lot of benefits, but then all these things I feel, or a word of caution, which of course comes with the responsibility, that there's a consumer out there who's always very, very I would say, particular about what kind of his personal data or the consent which he has given right, for a particular transaction. I remember sometimes signing my Xerox copy, which maybe I'm giving it, even for something in my daughter's school. I'm kind of striking it out and writing specifically, this is only for this school tour purposes, not to be used for anything else. So which is basically, this is, I'm talking about something which I'm doing in physical form. But in digital form, I would not even know which all places it land. So when we say that, of course, there are benefits, but then there are, of course, challenges. There are always, a consumer would be skeptical about, kind of having this data floating in the universe, and then anybody and everybody without the consent. As I said, it has to be, kind of used with utmost care. So. Not trying to be, and then of course that's a responsibility on everybody's shoulder, people like you, me, and everybody who's in this room, that we are acting responsible, not trying to be cute or adventurous at the same time. Because as I said, there's a consumer out there whose, the financial health or his financial stature can be definitely dented in case it is not kind of used with the responsibility. And another challenge there is, of course, this space is evolving right now. This data privacy and all. I mean, we have seen that DPDP also, of course, that's a draft guideline. There is of course, the directive which is being given and all. But then I'm sure there will be more to be added as we kind of move along, and then of course we kind of learn more, ways where this can be. I would say, for a lack of better word, until it is not watertight kind of a scenario, where this is not flowing outside the, where it is required. So I understand that alternate data, it's like a vibe in, a digital lending space, but then it comes with a lot of responsibility. Let's use it to, of course, enhance your models, to cut your cost, but then be very, very particular and aware about I would say the security and safety of a consumer. Otherwise, we know that this data on the face of it, it can be used maybe only for some financial transactions and all, but then there are sometimes the damage is beyond your financial, thing. So that's what I feel, when we talk about alternate data and usage of it in our, financial life.
Absolutely agree with you that with these challenges, the responsibility lies on the ecosystem players as well to use that data in an effective manner with user consent in place. Right. So we come towards the end of it. I think we have a minute to pick a question from the audience if you would like to ask anything. Yeah.
Data is outsourced and is freely floating in the universe, right? People are getting the calls, even though they don't need it. There is a clear need of a segmentation of our data. Who really need it, right? And what is the purpose of it, right? Sometimes overcalling is creating a better experience for a customer, right? How do we solve it? That's one thing. Second thing, you also touched upon a very nice point, like about collection, right? How to use the internet data to preempt, whether we are going into a wrong direction or particular segmentations, right? And that is going to be useful as, the way macroeconomic environment is changing, right? We got a lot of people moving around the world, like a lot of layoffs are happening, right? That will help an organization to take a strategic decision, where to increase the lending or where to stop, right? So, what is your view like? How do we wire up all this information into a decision model, right? One, improve our quality of the credit, and two, improve our customer experience, because cost of acquiring a new customer is very high, very, very high. Believe me. So, making a spare one doesn't help. If somebody really needs, I think so we need to create that segmentation and bucketing to identify, and we also need to have feedback loop, which is completely missing. I remember, I get 10 times a call in a day from the Hotel Finance. Same organization.
All of us.
Yeah. So there is no feedback loop at all, right? If I being in a very senior position in an organization, once I say I don't need credit, if I need it, I have a good credit score. They only have one thing, one data point. This person has a good credit score, and this is phone number. And I say, yeah.
No, so we get your point. You would like to take it up, Anoushka, partly, and maybe Presha can take it up.
So, see, I think, the problem why it's gotten out of control is purely because of the expected conversion as well, right? So, if you look at, when we are calling this customer base and everything on the segmentation point, even if, because you're calling, I'm just making up a number, but say even if you're calling 100 million people, even if 0.01% converts, you have enough business to be able to do, right? So there are a lot of different models out there, and you see this call problem is real, right? Because how many numbers are you going to block, right? After a while you're tired of blocking, so you're like, just keep calling, right? But I think it comes to the DNA of the lending that you want to build, right? If today, that's why I made the very clear point, right? If you are focused on what is the customer experience you want to drive, you know that that's not the right way to do it. There's a lot of different ways that you can engage with the customer, right? And exactly as you said, you don't need a loan today, but say you're on a platform where he sees a banner that, okay, click this to get a loan. Now, you don't need it, but you've got that recall of, okay, I can get a loan in 2 minutes, and these are the 3 simple steps, right? So I think India is very large. There's enough business also. There's a reason why this calling happens, because even a 0.01% is enough to drive volume. But it's fundamentally going to come down towards what's the DNA of the lending you want to do, and what's going to be your tenets of how you are able to set that up as well.
So, just to add to what she said, if you see in terms of era, selling loan via phone call is medieval times, and today, over a app interaction in 2-3 minutes you can get. So it is more of customer driven thing, and that's how the ecosystem is evolving. They are creating everything ready. You go to their shop and they'll give you what you are looking for. So this thing would definitely change in times to come, and that's why this alternate data mechanism has come into place. Right.
My second point, where how to wire up this macroeconomic downturns into a decision. We talked about, right? There's a lot of macroeconomic change, like a lot of people are getting laid off, there's a lot of changes happening. Like, so for example, I being a credit company, I'm lending people, let's say, X number of people employees, they're not fired, right? So my credit is going to get hampered. Right? So this kind of events, don't you think we need to wire up into our own decisions? And not from that, your strategy, right? As a company, I know that it's a time that I think that we going in a downturn. What is your strategy? Shall we lend? Shall we stop? Shall we begin to use? What do we do?
So, I think there's like multiple parts to it, right? So I think there's the first part on when you're underwriting an individual, right? You're definitely monitoring what his account balances and everything, right? So that's what we talked about, how AA and everything can be quite powerful. But overall as well, these kind of macro risks that you end up carrying, to a certain extent, this will be sort of a systemic risk that you also end up having, right? Now, for that, that's why a typical lending, they also build in that, okay, in a stress case, right? That's a continuous stress that you do, right? If X% I'm exposed to a particular segment, Now, within that segment, for example, if there is a bust, how does that impact my overall sort of, my sort of bottom line, right? What's the impact that we see? So I think the key focus of doing this, more than just the decisioning, is also lending is a lot about the diversification that you do, right? So at no point do you want to then be overly concentrated that, okay, I'm going to lend to, or to example, right, to hundreds and hundreds of Google Pay employees, because what if there's like a layoff there? So the more diversification that you're able to also bring in will help you do it while you do stress testing onto an overall portfolio level to see what's the impact to your bottom line also in that sense.
Great. I'm really sorry we are running short of time. So thanks a lot everyone for joining us today.
Thank you. Can we please have a round of applause for our panelist and our moderator? And on behalf of NPCI Bharat BillPay, I request Mr. Chinmay to please have a moment of felicitation for all our panelists present up here on stage. I request our volunteer to hand over the giveaways to Mr. Chinmay, and we request Ms. Presha to step forward on stage to have this moment of appreciation. Some picture perfect moments to be clicked alongside. Thank you.